What I'm going to go over today is basically some of the house rules that I use when I trade. Um, we do quick trades, usually within 10 to 25 minutes, and we try to go for one trade a day. First of all, everything we do is going to be on a 5 minute chart, which means every single box you see in the charts coming forward will be 5 minutes each. We trade all the stocks over under $15. So usually 0 to about 10 is our usual range, but we can go up to 15. The rule is that by 8:35 in the morning, which is 5 minutes after the market opens, the cumulative volume, which is pre-market end, the first 5 minutes, have to equal minimum of 1 million. And that's essential because we're using momentum to trade the stock. And if it has that 1 million minimum, and if there's one or two, the highest of the two would be more favored to go on. We don't usually buy right after the first 5 minutes. There's usually a 5 minute jump, then a consolidation, and then we go up from there. So let's say between 8 and 8:35, there's five stocks on the scan. We're going to chart all five of them because we want to wait for the one that's gonna give us the best value. And when we chart them, we know automatically which ones to focus on and which ones we really don't care about. In case there's a tiebreaker, so if there's one or two stocks that look the same and act the same, and you have the same uh, volume and gain, we look for the float. The one with the smallest float is going to go the fast. It's going to go the fastest because it's going to have the least amount of shares to trade, and less people can influence the trade more. We're going to draw Fibonacci lines and we're going to trade between the 1 and the 1.618. And that's very simple. Usually these stocks go above that, but we care for just for that first quick range that we can get in about 10 to 15 minutes. Now, if the stock doesn't move anywhere within the first 30 minutes, we're going to cut our losses and we're going to get out. It's a lot of information. I'm going to show you some quick samples. First one is going to be RCON. And you may wonder, hey, where are you getting these stocks from? Do you have a scanner? Yes, we do. We use FinViz. That's my default scanner, and this alerts me for the criteria we talked about before: under 15, over 1 million volume, and around 8:35, you only see one or two of the stocks that pull up. We also have the same scan built into TradingView, which is right down here. So you notice ATOS, BLDP, KDMN were the same stocks that were on FinViz as well. So this is very, very simple, and it just requires a lot of discipline to follow through. First step, like we said, stock is under $15. This one's about 3 right now. And we look at that first bar. Now, this is the cumulative volume between pre-market and now. And as you can see on the top right over here, you'll see this changing a little bit. The volume is 2.31 million. So that means that 2.31 million shares were traded pre-market in the first 5 minutes. That beats our minimum of 1 million. And we're going to go ahead and draw our lines. Fibonacci used the lowest point and the highest point. In this case will be 343, or let's see, 340 actually. And the lowest point is going to be 238. 239 is fine. So our main goal is to have the stock clear the one line, and we're going to sell at that 1.618. And that's what we talked about earlier. So before you get in or anything, you already know what your goal is going to be. So for example, this one right, if and when it passes, you're looking at an 18% return. So the 18% return in about 30 minutes, that's our goal. And now we just wait for this stock to turn back around. Usually when a stock turns back around like this, it is a good sign because it's going to consolidate, the volume's going to come back in, and it's going to push it to the next level. If it never consolidates, that means that there's no stopping point for people to get in. If it keeps going higher, that means more and more people are going to sell later on down the line. This is a great consolidation pattern. And you, at the same time, you can see the volume, which is red because people are selling, more people are selling than buying, but it's a lot lower than the green volume bars that we have. So you see this green volume bar here, here, and here. This gives you a clear signal that the volume is coming back in. The stock is making a U-turn, turn around. So as soon as it touches that 340 line, I'm getting in. And this one we did actually get in right about that, and we sold right before that 403 line. So we were able to capitalize about 16% on this trade. And of course, it's going to go. Actually ended up going up to the next line at 504, and then it drops right away. So you can see how important these lines are. These will set your support and your resistance, and day traders use these lines for that reason. Let's try another one, one that is for more recent. This is of the 26th of January. Again, the first bar we see is 1.278 volume. And I think this one and another one, ATOS, which we'll see again as well, they were both on the scan, only ones on the scan first 5 minutes. And this is where we will draw our lines. I'm going to draw my Fibonacci line here. Just give my numbers. So the bottom is right here. I believe it is at 257, which is here. And my high, it is at 433, which is right over here. So here we see the same thing. First box, the volume went up. There's a consolidation right here, consolidation right here, and then it crosses our line. This one I got in around the 440s, and your goal is 542. So right off, before you even buy anything, before the consolidation starts, you know that you're looking at a minimum or a maximum of 25% return. And we hit that in about 10 minutes. 25%, 10 minutes. It just took that much to get it through. We're going to go for ATOS. It's also on the 26th. Like I mentioned, this one was also another top runner. This one had 1.01 million volume, so SPM was higher, which is the main reason we went for it. Also, the candle was a lot more favorable. Let's draw our lines. Here's my bottom, here's my top, and there I go. So my goal is one right here. Now, this bar went up, and it never really consolidated anywhere. So it never took a break for it to catch up before it went any higher. It just kept going higher. We know that it has to take a break somewhere. Whether it takes a break right at that one line or before, we need some consolidation before we go to the next line. Looks like it passed the one, then it consolidated down here before touching the goal. This is a little bit more riskier because of the consolidation factor, but this one also went up to the second line and hit its goal. This one, the goal off before we got in was 6.28%. Now, compared to BSPM of 25, you could see why we went with BSPM instead of ATOS. Higher gain, lower float, and just a better overall setup. ATOS, and this is from today, the 29th, had a better day today. Let's see what it looked like. There you go. Here it went up. Consolidation, as you can see, it dropped down a little bit, so it went a little bit sideways right here. Not the consolidation that I want, but it's there. And then it pushes through that 51 cents right to the next goal. So within the 5-minute bar, it hit our close to 8% goal. Let's see the official number. So from here to here, 7.24%. And I think ATOS was the number one lead as far as the volume goes. I think this one hit 2.31 million volume in the first 5 minutes. and that's the one we went and went with. And again, went up, came down, consolidated a little bit right here, then just popped back up and hit the goal. LTBR, this was a really interesting one. This had pre-market news. It got some patent approval for its nuclear fuels. First bar has a volume of 3.987 million. Now it's a red bar, meaning it went down, but even in pre-market, it had already passed that 1 million mark. Draw a line here, draw a line there. Once it passes that one, it hits our two, but our goal range here was very, very low. Our potential was about 8%. So before you went in, you knew you were looking for an 8% gain. Went down, bounced off the zero line, and then when you start this coming back up, you get in on the one, you get out of the 1.6, 8% gain in less than 5 minutes. CNET, and this is a good one for if you're ever tempted to get in prematurely and try to know, hey, it's going to come back around. I know it's going to do it. It's going to bounce off, and you get in without the confirmation and before it touching the high of day. First volume 2.99, and let me draw from the bottom here and here. As you can see, it bounced off the zero line. And right here is when you would be tempted. So if you saw this, because it actually came up to here, you would have gone in. People have gone in there, and it never confirms. It drops back down, and then pretty much before you know it, you're at $4, starting at $5. So that's all you would have lost 20% in the first 3, 4, 5 hours, just because you didn't wait for it to confirm. Now on that date, the 23rd, there were probably other stocks you could have bought that would have made you some money. But remember, CNET got its start from this day. So this is the day on the 4th when it had some blockchain news, pre-market. And we drew a line right here. The first box was 2.4 million volume. First box, it went down a little bit, then it went up. No real consolidation, so I was kind of iffy on this one. It crossed the line and touched the goal within the first 5 minutes. And our maximum hold time is going to be 30 minutes. If it does not touch your goal in 30 minutes, it's time to look for an exit strategy. Exit strategy is basically, let's say it never touches this line and it comes back to this line. You may want to consider stopping out at a 3.34, or if you want to wait for a bounce back, the longest I would hold it is 3.22. This one had a 10% potential, and it hit that within the 5 minute range that it was in. BLDP, this one was from today, and this one's an interesting one. So if we were to go back and look at all the other ones, all the stocks that broke through that one line, look at this volume. It's a lot higher than the previous two. This one had no volume because it was a negative one. This one had more volume than this one. The breakout had more volume than the original volume. And also on this breakout, which was not really that well anyways because there's no consolidation, the volume was lower than the original volume. BSPM breakout volume was more than the original first box, and RCON breakout volume was pretty close to the original volume. And that's what set BLDP apart today. Today, this one was up against ATOS. ATOS had more volume in the first 5 minutes. This one had about 1.12 million. And just for comparison, ATOS had 2.31. Let me see, this is the right date. Yes, 129 had 2.31. So you already knew in the first 5 minutes where all the volume was concentrated at. Another thing that I mentioned in the PowerPoint was the float. So you have ATOS at only 31 million float. That means only 31 million shares are available to trade for that stock. Once those get bought up, the price is pretty much controlled by the buyers. As you can see, BLDP is 160.5 million shares, meaning to for it to for you to put a dent on this, it would need at least 100 million shares to be traded for any movement whatsoever. We barely got 15 million, whereas ATOS was sitting at close to 50 million, which is about 10 million more, or almost 20 million more than that $30 million float, or 30 million share float. But we'll chart it anyways. We'll do BLDP, bottom here, top here. Top should be a little bit lower. The high was 357. We'll bring it down one. And the bottom was 339. We'll bring that down a little bit. Yep. So again, this was the same scenario as ATOS here. It just keeps going higher, but there's no consolidation. Even the ATOS that day went up and it went sideways for a little bit. It went a little bit lower, consolidated a little bit here before it popped up. We had no consolidation. We just had higher close, and then it broke through, but it never really cleared. And of course, the volume is a lot lower than the first 5 minutes, not to mention the $160 million float. Let's see what our potential would have been. Potential was only 3.17%. Now, would you want to risk capital or a bad trade over 3%? Probably not. As you can see, all the other ones we went through, there's a 10% gain. We had 8% here, 7% there, 6% there, close to 25% today or the other day over there. So a 3% gain is not even worth my time. And at the same time, ATOS today was already offering me 7.2%. So again, as we circle back to the main presentation, um, the key thing here is being disciplined enough to trade within this parameter right here. If you are able to trade this, you should be in a good situation. Um, don't forget, after 30 minutes, if it hasn't hit your goal, and as we saw, they hit goals within 5 to 15 minutes of them clearing, you need to get out because it's not going to hit later. Or it might, but you don't want to risk that. So I'm going to end it at that. TradingView has our scans. FinViz, basically all I'm scanning for, let me show you the criteria, is any stock under $15 in the MX, NASDAQ, or NYSE. AMEX was recently bought by NYSE, so it's the same thing. I have change up 5%. You don't have to have that, but usually if a stock has volume, it's already up more than 5% in pre-market, and the volume is over 1 million. So exactly what we talked about on the PowerPoint. That's our chart, and we try to do only one trade per day. There have been days we don't trade, but when we do, disciplined 6 to 10 to 25%, and we're done. For this year alone, our goal is to hit at least 100% gain with the stretch goal of about 150%. And that's it. Thank you.